Can you build a custom home with a VA loan? Well, if you've been watching this channel for more than a couple of days, you know by now that this is indeed possible because we've done several videos on this particular topic. But I still get calls every single day from veterans who are trying to figure out whether or not this is indeed true. And the reason for that is not really their own fault. It's actually just because of where they're getting their information. You see, unfortunately, there's a lot of those big lenders out there that specialize, or they say they do specialize in VA loans, but don't offer the VA construction loan. And then what they decide to do is instead of telling the veteran that they just don't do the construction loan, they tell them that it maybe doesn't actually exist at all, or it's just a myth, or they do tell them that, it does exist, but no lender is out there doing it, because unfortunately they don't want to lose business. Anyways, rant over. Let's dive into it. The very first thing that I want to talk about are the perks to doing a VA one-time close. The first one is going to be the ability to do it. You are going to have the ability to purchase land and finance the construction all in one loan at the exact same time. Versus if you do a two-time close, this is where you are going to be doing them separately, the land and the construction. But then later down the road, you would have to do a refinance to combine those two loans. On a one-time close, you don't have to do that refinance later down the road. The loan closes up front. The reason it's done up front is because that's how the builder is going to have the funds that they need to be able to build your home, is because we need to actually fund the loan in the very beginning in order for this to be possible. Another perk is with the one-time close, there are no monthly payments while your home is being built. So you actually have the ability to use this as an opportunity to save money because you're not having to make a mortgage payment on a property that does not exist yet. My other big perk that I really love is the float down option. When going through the VA one-time close process, you have the ability to close on the loan, and during the time that you're closing on the loan, you're going to have an interest rate locked in. But then let's say while your home is being built, interest rates get better and go down. You'll have the ability to float down to the new rate, whatever that new rate may be at the time of your home being completed. But what if interest rates go up? Well, if they go up, you actually get to just keep the rate that you already have. So you're essentially knowing that you're basically getting the best possible outcome while your home is being built. Now, what if you already own land? Maybe you purchased the land with a loan, like a land loan, and you haven't started the construction process because you didn't know when you were actually going to build your home. If you already own the land and have a loan on it, then what will happen is the balance of that loan would essentially be paid off and included into your new loan when doing the VA one-time close, so that it's all under one actual loan, which means that if you have that land loan that you're probably making payments on right now, you essentially get to basically stop having those payments being made once the loan does close. So that way it's all in one loan. Now, if you don't have a land loan, you just own the land outright and free and clear. Well, now this is just essentially equity, and then the loan that is actually going to be done is solely just for the construction. Another common question that I get around the land ownership or purchase process is, what if this particular property already has a dwelling attached to it, meaning it already has a house on that property? Can I still do a VA construction loan? In this situation, you would not be able to do it. The only way this would work is if either A, that home that is already existing is going to be completely demolished, or B, is if the land that home is a part of is now going to be parceled off or subdivided to essentially separate them into two separate parcels. So that way the parcel that has now just the vacant land can be used for the construction loan. Now, if you don't own land, what kind of land can you possibly buy with this overall VA one-time close process? Well, you could buy raw, vacant, undeveloped land if you want to, which means that if you are looking at a piece of property that literally has nothing set up yet, meaning there's no hookup to the city, there is no sewage or anything like that, you can purchase that property. And then whatever is needed to get that land to where it needs to be to build on it will just be included in your construction plans. If you are looking at purchasing a piece of land that maybe has been developed by a developer, because there are a lot of real estate developers that actually do develop land without actually building a property on it, you can purchase that as well. Now, you may save on not having that in your construction plans, but then you also may be purchasing at a higher price point because someone has already kind of come in and done that development. In regards to zoning requirements, every area and state is kind of different, but essentially you could purchase vacant land that has been zoned for residential, zoned for like a neighborhood or a subdivision. If you want to buy and build a multi-unit property, you can have it buy a property property that has been zoned for multi-unit. You can buy rural land, you can buy agricultural or farmland. There's several different forms of land that you can purchase with the VA one-time close to be able to build a property on it. As for what you can build a single family home. If you want to build a multi-unit property, which would be a duplex, triplex, or a quadplex, you can do that as well. If you want to build a barn dominium, which I would say is probably the most common question that you guys ask me so far for those of you that have reached out is, can I build a barn dominium? Yes, you can build a barn dominium. If you want to do a modular, prefab, manufactured home, the list goes on. There's several different properties that you can build with the VA one-time close. The ideas are almost endless. Now, the part that you're probably waiting for is going to be the qualification aspects. And this is what I would say is going to be the most important part for people to understand. In regards to max loan amount, you see, in the past, I was working for another lender that had a specific loan amount that you could not exceed. And that loan amount was $2 million, which means that if you wanted to purchase or do a VA one-time close, the maximum loan amount that you could do was $2 million. However, they did also have a down payment requirement. So if you were building a property that had a loan amount greater than $1 million, anything between $1 million to $2 million, then you were going to have to put a down payment of 5% in order to get a loan with them. Well, fortunately, now where I am at does not have that at all. You could actually build up to a $4 million property at 100% financing with no down payment whatsoever at the $1 million mark. You have the ability to basically go up to that $4 million price point as long as you income and credit qualify. And when it comes to credit score, I also saw credit score improve as well. Previously, the minimum credit score that was allowed where I was 620 on a VA construction loan. And now where I'm at, the minimum credit score is 580. So there's a little bit more room for those of you who maybe don't have the perfect credit profile. In regards to the debt to income ratio, I also saw that improve. Previously where I was, the debt to income ratio was 55% or less up to $1 million. And if you were purchasing or building anything greater than $1 million, then your debt to income ratio needed to be below 50%. Well, fortunately, where I'm at now does not use debt to income ratio whatsoever. They are using the VA guidelines, which goes based off of residual income. Now, if you don't know what residual income is or how it works, I've done some videos on that I will pin above, but just to give you a quick summary of what that is, residual income is based off of first where you're located geographically. There are 4 regions that make up the country, and then it's based off of your household size. So depending on what your household size is, the VA sets a certain dollar amount that they're going to expect you to have left over after all of your bills are paid. As long as you meet the residual income requirement, you could potentially purchase a property and construct that property with a debt to income ratio of 70% in some situations, because the residual income amount is not based off of a percentage. It's based off an overall dollar amount that is affected of what your income is, what your current liabilities are, and also what your new potential mortgage payment will be. Now, when it comes to the approval process, this is where I didn't see really much change when it comes to the overall loan approval. You see, when you're going through a loan approval, the mortgage company is looking at essentially 4 main things. They're looking at your income, monthly debts, credit, and they're looking at your assets. And when they look at those things, it's going to come up with what your residual income is. And then they're going to take all of that information and they're going to submit it into an automated underwriting system. It essentially is what we call AUS. This automated underwriting system is going to make a decision based off of a risk classification, and it is a pass or fail grade. It's simply approve or deny. And when you run it through that AUS is when you'll know whether or not we could actually pre-approve you based off of the loan amount that you are trying to qualify for. If you are purchasing just a pre-existing property, which means just the normal way of doing a VA loan, we actually don't need the AUS to give you an approval, because in some situations we can do a manual underwriting, which could allow those who didn't get the automated approval still be able to qualify. Unfortunately, on the construction loan side, you must be able to get an AUS approval to be able to qualify, which leads me to my next point. If you are going through the process and the goal is to construct a property, what we're going to do is try to see if you meet that AUS requirement. If you do, great, we move forward. And if you don't, then what I'm going to try to do is talk to you more about what you need to improve in your financial situation, whatever it is, so that way you have some marching orders and some homework for you to work on to get you to where you are trying to go. So that's what I have for you guys in this video about VA construction loans and how things have changed in regards to guidelines and rules. Hopefully you got some value out of this video. If you did, do me a favor, hit the like button. Let me know down below in the comments if there is a question that maybe I missed that you want me to answer for you. I would love to answer it. And also, the last thing I want to leave you with, which is also the most important important thing. Jesus loves you and he paid the ultimate price for your life. So if you turn to him, trust in him, and believe in him, he has a beautiful plan and purpose for you. I'll see you guys in the next one.